to show you a live demo of the trading school. So you can pretty much see what happened today in class, everything that Mark Putrino went over with the students. Show you a live demo. Oops, okay. All right. So we're basically going to show you the live class where Mark is right now. So there is a live class for all you guys that don't know. It's Monday to Friday. So Monday to Thursday, 7 to 9 a.m. Eastern. And then from 12 to 1, you have the Q&A session. Fridays, you only meet for 2 hours. But basically, you have live trading rooms with Mark Putrino nonstop. And we've been trading a couple stocks. He's going to talk about this. But in the chat, okay, in the chat, I need you guys to tell me when you guys are ready to go. Otherwise, there's no way of me to know, right? So in the YouTube chat and also on the Zoom chat, go ahead and let me know there, guys, when you guys are good to go, and we can get this class going. We can get the session going.
No one had any idea what a big change is.
All right. Don't use the Q&A. Use the chat in Zoom. Nobody, so we don't check the Q&A. You have to just use the normal chat with everybody. Oluwafaka. I think I said that right. So, all right, folks, let me get this thing going. All right, folks. So let me know whenever you guys are good to go in the chat, and we'll go ahead and get it started. Okay. All right, guys. So took care of what I had to take care of. We're good to go. The class, we're going to start streaming it. Keep in mind, Mark is not able to listen to you or read your comments because he is in the live school. I'm just showing you a replay, not a replay, but I'm showing you like the live class so that you can kind of get a sense of what we do there when we're trading or when we're learning or talking about stocks or acquisitions, whatever it may be. So let's go ahead and get this thing started, guys. All right. All right.
All right, so let's see. Under current rules, brokers must perform reasonable diligence to determine likely the best market for executing a trade. Many brokers route orders to big electronic trading firms called wholesalers rather than to exchanges, arguing that the wholesalers provide the best price. But as I just showed you, that may not be the case. If everything, they're just saying that they're providing a better price because if it's a sell, they're going to pay a better price than the bid that's showing. But the bid that's showing may not be the highest bid that's out there in the market. So that's where the controversy comes from. They'll say, what are you talking about? $30.95, we're going to pay you 30, or $30.93, we're going to pay you $30.95. That's 2 cents better. We're improving the price. If you sold it at the market, you'd get $30.93, but we're going to pay you 95 cents. But we know, and wink, wink, whatever, or, not going to say anything, that we can turn around and sell it in the market at 31 because we know there's a buyer who's willing to pay that. So what he's saying is that if all of these orders, if everyone in the world's orders all went to like the same exchange, there would be better price discovery. So that's what this is all about here. He said he's directed staff to potentially allow stock exchanges to quote shares in increments of less than 1 cent. Yeah, so that's the gist of this. Yeah, market segmentation, lack of a level playing field. Um, I'm not that anyone cares about my opinion, but I think when I first started trading, everyone used to blame like the specialists, right? The specialists are the guys on the floor who are essentially market makers of whatever stocks they were the specialists in. And everyone used to say, oh, the specialist ripped us off, or the specialist is taken higher, specialist is blah, blah, blah. Kind of similar to now, people say, like, oh, the market makers are doing this, or the market makers are doing that, you know? Um, but I think that was a better system to go to this back to the specialist market and have everything concentrated in one place. Because that would be, I'm sure I've heard from some of you guys where you have a situation where you would say, I placed an order to buy a stock at say 20 and I saw it traded at 1990 and my order didn't get executed. And why is that? It's if I'm willing to pay 20, why would that person sell it to 1990? And the answer is that the markets aren't linked together. So what he's saying is if you got rid of these wholesalers and these private exchanges or dark pools and everything just went to the NASDAQ, there would end up being better liquidity. Hey, what do you rate my biography stuff? Probably be more exciting than the Janet Yellen biography is going to be. For those of you who aren't here yesterday, we saw that this is Janet Yellen is having a biography. Janet Yellen denies trying to reduce spending. Well, that's not what it says in her biography. Oh, she's from New York. Huh. I don't know that. Yeah, Boris says if people did not want to give money to Apple, it would not be that sneaky. I agree, man. I think it's ridiculous when you just see these people that are so so interested, so into their phones, man. Like when I go for hikes in the woods and stuff, I shut my phone off. You know, it's just people are just so addicted, and I guess that kind of fits in with the concept of over trading. People are just always like you just always feel like they got to be looking at something, and it ruins your eyes. It gets you get repetitive stress syndrome. um it's I don't know, man. I just I think it's kind of just ridiculous. People are missing a lot of life because they're you'll go and you'll go to a restaurant and you'll see like a family having dinner and everyone's on their phone. It's like, what are they texting each other? Like I'll do that sometimes with my daughters. Like my daughter will be on her phone and she'll just be like, in a daze, and like, hey Ava, hey, hey, time for bed or whatever, and she'll be like, okay, time for bed, okay. Then I text her, time for bed, and it's like, oh, all right, Hey, Rodrigo, what's going on, dude? Tupperware might break 624. Well, let's see. Yeah, well, I guess it has. That's a good call there, if that's what you were looking at. All right, so let me take a spin through the markets here, and then I got to go to the dentist this afternoon. Sounds like fun.
Okay, folks, really quick, I'm getting a couple of emails here from you guys, so I'm just gonna, get this out of the way so that we can carry on with the lesson. There is a $7 7-day trial with the trading school. If you do want to give it a shot, you do have 7 days, literally $7. Can't get better than that, honestly. After the 7 days, if you want to, carry on with our lessons and our group, our community, what we're doing, trading, all that stuff, it's $14.97 for the year. It does come with Pro. And if you have questions, put them in the chat. But I just wanted to get this out of the way so that we can carry on, folks, with the lesson here.
I mean, I would still be watching this thing for a reversal. It's something like this could happen. I remember one time when cell phones first got popular, there was this guy, like this guy thought he was some kind of a big shot because he had a cell phone, and this was at a point where like a lot of people didn't have them yet. So he was on the train, and he was like talking to all these people, and he was giving his phone number. So I wrote his phone number down. And when I went into the trading desk, I said, "Hey guys, here, let's prank phone call this guy all day," because he was so rude on the train. And we were getting the phone call coming in from the trading desk, like it registers all these weird numbers. There's like caller ID doesn't work. So that guy got what was coming to him. All right, guys, I'll do a quick run through of the market here, and then I'm going to hit the road. So again, SPY, same old story here. 415 is a level to watch. Really, nothing's changed. Apple, 151. Yeah, my guess is these are just technical reversals. I'd be shocked if it was, anything that he had to say is moving the market. XLK coming in a little bit here. But, again, testing this important 141.70 level here. Healthcare not really moving. Consumer discretionary pretty flat. So, same old situation. I guess pretty much same thing as this morning. All right, Dami. Yes. All right, Cypher. All right, everybody. I guess I will be talking to you guys soon. Just trying to make sure I didn't. Do I think panic selling is going on? No, I don't think we've seen the full-blown panic yet. I don't think we've seen a capitulation. In other words, I think that this is essentially a bear market rally, or what we've had. I mean, actually, let me rephrase that. What we had was a bear market rally. Market hasn't really gone anywhere now in 2 weeks. Huh, that's kind of interesting. Yeah, so I don't think this is our final bottom. But here's the thing, though: we don't need to be right. If SPY breaks 415, then that's it. Then that's it telling us it's going to go higher. So we let the market tell us what to do. I mean, I don't think it's going to happen, but if it does, it does, and then we act accordingly. You're welcome, G. All right, Donnie Sacker and Johnny 3, Skinny Dip, Mr. Steven. All right, guys, I guess I'll see you tomorrow morning. We're going to talk about momentum tomorrow. So overbought, oversold, how to trade momentum reversals. And I guess.
Okay, folks, don't worry. It's not over. We're not finished yet. We still have a lot more to go through. That was just a little piece that I wanted to show you from the class, part of the class. But I want you to see the whole thing. Well, I mean, a lot of it. More than that, right? I think you guys should deserve it. You guys definitely deserve it. So I'm going to get this set up. I'm just going to wait here for the recording really quick because it looks like pop up here. So just in case, if any of you guys you have a full-time job or maybe you missed the class for any reason, you always have the recordings, right? So you always have that to fall back on. If in case you have a full-time job or you're busy or you can't attend the classes, you always have that bank of knowledge there waiting for you to just dice it up, right? Pen and paper. This is something you do want to kind of take notes and stuff like that. Let's see if this thing is there. Okay, so this, so the class is trends. Okay, guys, that is the class from today. That's my cat if you hear something on the back, but basically we are going to, it's the same chapter, right? So you see trends, that is the same, that's the chapter for today. You have a class from 7 to 9 a.m. Eastern, and then you have a class from 12 to 1, which is the one I was showing you. In the meantime here, what I'm going to do is that I'm going to show you the class that we had today. It's right here with Mark. Let me just check something real quick.
They're gonna.
Okay. Yes, it does come with Benzinga Pro. Yes, the trading school comes with Benzinga Pro. So as long as you have the trading school, you're going to have Benzinga Pro included. It's just part of the deal. And you can do all your research, all that stuff. I'll pull it up really quick here. Where you can do all your charting, news, all that sort of stuff, whatever it is that you're looking at. You can pull up all the news and stuff like that. We'll go over it a little bit more later. But in the meantime, let's go ahead and get this thing started so that I can show you guys basically, I can show you the class from today, 7 to 9 a.m. Eastern. Let's go ahead and click play on this and we can get this thing started.
Hey guys, good morning. Hey, you guys see this thing? That they have this drug that they say cures cancer. Yeah, it's pretty wild, man. Let me see. Let's see, cancer remission. Let's see. Well, I'm not going to go to that because I don't like them. Yeah, look at this. New York City cancer trial delivers unprecedented results. And it says, well, I mean, I'm not a doctor, obviously, right? But apparently there's like some kind of thing in a cancer cell that hides it from the immune system, right? Everyone has cancer, but your immune system gets rid of it. But eventually, if you get old enough, your immune system starts to get weak or whatever, that's when you catch it. But so anyway, this thing eliminates the ability to for the cancer cells to hide themselves. But it's only 12. Oh, it's only 12 patients. Oh, I thought it was more than that, but anyway, it's at a legit place. So yeah, so it's pretty amazing. I guess one day, just like, people used to get typhoid and diphtheria, I guess one day people won't get cancer anymore. And then we'll probably have overpopulation. And then it'll be like that Star Trek episode where you just get to a certain age and then you just got to go report to the place where they, it's time for you to die. It's like, all right, it's time for you to die. You got to go over here and check yourself in. So I guess that could start us off with a philosophical question: is how will civilization end? I think I'm going to go with some kind of a meteorite or an asteroid hitting the Earth. Kill the dinosaurs, although it didn't really kill the dinosaurs. The dinosaurs were birds. All right, so that's a little intro there. Good morning, everyone. We're going to... Hello, Pat. Hello, Maddie B. Hello, Born to Be. Hello, Chad. Can we check out Rig? The option flow is 100% bullish. Over 3 million in calls came in yesterday. Well, don't forget. Good morning, Cyber. Good morning, Spark Trader, Mr. Steven. Don't forget, Chad. for every buyer, there's a seller. So, someone bought those calls, but someone sold those calls as well. All right, let's see here. Wow. So what happened here? Let's see. Transaction gets contract. All right, so there's news driving this. Transocean said late Monday it secured a contract extension from Equinor Energy for the harsh environmental submersible, blah, 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 Transocean Spitsbergen for work offshore. Yeah, so this is trading up on news. So, I would say it's oh, look at this. This is kind of interesting. So, if the news is a game changer, then this move could be justified. But as we can see over the last year or even longer, this is kind of a resistance zone. So this is the 480 level. So I'd watch that. But if this news really is a game changer, then maybe this move is warranted. So let's go over to the rig website here and see what they have to say. Oh, so it's a $181 million contract. So that's pretty big. All right. So first of all, let's go look at their results. All right. So total contact revenues for a quarter were $586 million. All right. So this deal is 181 million. So that's that's not nothing. I mean, that's impactful. That's meaningful. Let's see, is awarded an additional 9 wells plus 2 1-well options. The firm estimates backlog excludes revenue associated with performance. The estimated firm backlog, that's means they're back orders, excludes revenue associated with performance incentives, additional services and options period for the contract. Well, I mean, I don't know enough about this company to know, if this news really warrants this move higher. Because a lot of times, Chad, people buy stuff just because it's a penny stock. They hear, oh, news on a penny stock. And, I'm old enough to remember when penny stocks were actually penny stocks. Now a penny stock is anything up to $5. So I would be watching probably for, well, let's see what it did yesterday. So it trended higher all day yesterday. Yeah, so I guess that's kind of the thing. I know this isn't a really good answer, but I guess you keep an eye on it, and if the news is really, warranted or is good. The reason why I looked at this chart, the 1-day chart, is because this news came out on Monday night. So this means yesterday people had all day to take a look at it and go over it, and the stock rallied all day. So that tells me that the news could be good and it could continue to move higher. Sometimes if stuff gets hyped up, it opens much higher and then it trends lower during the day. But, look at it this way. The news comes out and all these people who are invested in this thing, all these big institutional funds, they're all going to do their research and they're all going to say, hey, is this news warrant this move? And they're going to look at it, and over the course of the day, if it looks like it's worth it, they're going to keep coming into it. And that's what happened yesterday. It basically rallied from the open to about 3:00. So that's good action. When you see something like that, there's a good chance that it continues to move forward. But all of that being said, I'd be watching probably up around here, $5 for resistance. Okay. Hello, everyone. Maddie B, Alba, Cipriano, Bernie, Paul. Mark, I have a friend who currently fell into coma from cancer. Where did you read that, please? All right, let me find that again, because this is important. I mean, it's cancer remission. So it was a cancer remission. It was done at Sloan Memorial Kettering in New York City. So here, let me hit you with this. For those of you, hopefully it can help. Oh, well, that's not a very pleasant picture, but sorry. Hello, Tess and Lolo, Mr. Steven. 420. Yes, here we go with the 420. All my stoner students. So yeah, all right. So now yesterday we had a decent move higher. But we didn't break yet. We didn't break that 415 level again on SPY. All right. And today we're going to talk about trends. So, once again, we hit resistance. I mean, it was a nice move. But this morning we're trading down a little bit. Are we going to break out and keep moving higher? Well, I don't know. But here's what we got to watch to see. The same story. Apple, made a nice move yesterday, but it's still below this important level here. I think for SPY to break out, we're going to have to see Apple break this level here. This important 151 level. And I think also, too, we got to watch the financials because they still are below this important level, this 36 level. I was thinking about the Jamie Dimon comments the other day about him saying that there's this economic hurricane coming along. And I was saying how, he has access to this data of what all the what's going on in the banking world because he runs the biggest bank in the country. But in addition to that, I was actually talking to my brother about this yesterday, and he's an investment banker, and he brought up what is a pretty obvious point now in hindsight, but he's like, yeah, well, he's also, the investment bankers are the people that are talking to all the businesses around the country. And if the investment bankers are hearing, oh, things are really slowing down, we don't need as much financing as usual, blah, blah, blah. That's it's a guy who's got some insight. So I would say that he's someone who we should pay attention to. The stock here of JP Morgan shows us our interesting lesson about how levels that were support become resistance when markets are going down. And it happens because of buyer's remorse. Is it buyer? Yeah. So people buy here, it goes up, goes down, and now the people who bought are underwater. So they tell themselves they want to get out if they can and break even. So they place their sell orders at the same level they have their buy orders at. And what happens? A level that was support can become resistance. So now we have the same thing happen here. Support becomes resistance. Now we have the same thing down here, right? Support becomes resistance. So markets don't move in straight lines. They're a series of trading ranges, and in a downtrend, obviously, each trading range is lower than the one that was before it, and what was the bottom of the range becomes the top of the next range. So this shows us our principle here of the fact that in a down market, levels that were support become resistance. Now, when this stops happening, when we don't see this buyer's remorse anymore, that tells us that we're at the end of the downtrend, or we're getting close to it. And that's what a head and shoulders pattern shows, or should show. Like if this was an inverse head and shoulders pattern, this would be the shoulder, this would be the head. And now if we get back up above this, and if we see that what was support is not resistance, that this dynamic of support becoming resistance has ended, that's a characteristic that happens at the bottom. So the opposite is true when markets are going higher. What was resistance becomes support. So we can see that here. Resistance becomes support. Let's see if we can see it anywhere else that's pretty clear. It's not as clear. Well, actually, this one is. So resistance becomes support. That was resistance, and it becomes support. So these are characteristics of a bullish market. Think about it. It makes sense, right? Buyer's remorse. Seller's remorse. People sell, it goes higher. They tell themselves they shouldn't have sell, and they want to buy it back, but they don't want to pay more than they sold it for. So they place their buy orders at the same price they sold at. So if there are enough of those orders, what was support becomes resistance. So when markets are going higher, seller's remorse is a common thing. When markets are going lower, buyer's remorse is a common thing. So that's why when we look at these charts, we have to understand that we're looking at supply and demand dynamics, and we're looking at market psychology. You know, these charts aren't just like astrology. You know what I mean? Oh, and look at that. So I just put in this level over here. And if we fast forward to recently, that's where we found support. So resistance, support, support. So amazing. You can amaze your friends. All right. So I guess we could start off looking at oil over here. Wow, look at that. Because we're talking about trends. So markets are always trending. They're always doing one of three things. They're either going up, going down, or going sideways. And, you know, as traders, we can make pretty easy profits if we can recognize a trend change and when things are shifting from the market leadership. When a market's going higher, the buyers or the bulls, you could say, are in control. And when the market's going lower, the bears are in control. So the trend change is a change in leadership. So this is oil here, but if we just go into hindsight, and hindsight is 2020, but just for example, we have like a nice trend here. One way to identify trends is with trend lines. So we'll start off looking at those. So there's a trend. We got this downtrend here. We had this uptrend. We've been trending higher. And one of the things that you see in an uptrend is what we call higher lows. This means that as time goes by, buyers are becoming more aggressive. So markets don't go in straight lines. They go in peaks and valleys. So when we talk about higher lows, the valleys are getting higher, right? So we got a valley, next valley, but it's higher than this one. The next one here, you know, is higher than this one. This one is higher than this one. This one is higher than this one. This is higher than that. So when we get these uptrends, we get higher lows. And as we see here in oil, our trend is actually accelerating. So when we look at reversal patterns, right, they're dynamics that occur in the market when something is about to reverse that just manifest themselves on charts as patterns. the head and shoulders pattern, the rounded top, the rounded bottom, the V. I mean, you could say this right here is a V, but we just need to keep this in the context of, what do we see in the trend here? You don't need to know that this is an inverted V, or you don't need to know something is a head and shoulders pattern or a rounded bottom. You just need to watch and see who's in charge. Now, these blue days are days that were higher, where the close was higher than the open. The red days are days where the close is lower than the open. So the blue team's in charge, blue team's in charge, blue team's in charge. All of a sudden, the red team takes over. To use my sports analogy, it's like a football team, right? Pushing the ball down the field. The red team makes a stand, and they reverse things around here. So, people get too caught up with what the patterns are like. I don't know what this is here, but this has to be some kind of a candlestick pattern. I'm sure this has some kind of a name. And at one point in my life, I would have known it, but I don't anymore. But you don't need to know. You just need to recognize the signs of the reversal. So the red team is in charge, big selling. The red team is really overpowering the blue team. Then then we have this day. Then what happens on this day? Well, we don't get that much movement. The close and the open were pretty close to each other. So this shows that we're becoming equalized. The forces of supply and demand have equalized. And that's one of the things that happens before a trend changes. So they equalize, the blue team takes over and drives it higher. So I've seen a lot of people in my career debate over, is this pattern? Is this that pattern? No one's going to pay you for saying this is this pattern or that pattern. But if you can recognize when we get a possible trend change, then there's your chance to make money. All right. So with all that being said, good morning, everybody else. Lola, Mark, when we talk about good action in a stock, are we talking about the trend or a combination of things? Well, when we talk about action is kind of something that's, not quantifiable. Like, what's an example of good action? Like, say a company reports earnings that are worse than expected, but the stock goes up. We would say that's good action. You can't really define it. But if someone says, oh, it's got good action, or, oh, that stock acts well, that's what we're talking about, things that look positive. Like, I would say this, we talked about this for a potential trade idea the other day, right? To me, I would say this has good action. And what do I mean by it has good action? Well, yeah, it's obvious that it's up, but the fact that this resistance converted into support is good action. That sets the stage for a move higher. So when we talk about action, it could be, pretty much anything. It's, a stock is like breaks its downtrend, that's good action, or, bad action. Company comes out with blowout numbers, but yet the stock goes down. So action is something that's not really quantifiable, but, in trader lingo, when something acts well or it's got good action, that's what we're talking about. Something that technically looks good. Like, I would say Apple, like, if Apple starts to break this 151 level, I would say, oh, Apple's acting well, or Apple has good action, because it's going above a significant level. Obviously it was up yesterday, but I wouldn't be willing to say that it's acting well because it's only where it was 3 days ago. So, yeah, so that's what they mean. They're talking about pretty much everything. All right, so Chad says doubled down on cold. So let me think about this for a second. So cold goes, I get these confused. All right, cold is the one that goes inverse to natural gas. So let's take a look at natural gas. Yeah, I mean, if it doesn't break this 940 level, I mean, this is the next level of resistance. You'll probably see some kind of a move lower here. So I'm on board with that. I can see that. Would I say Apple is trending up or trending down? Well, it depends on your time frame. Yeah, I mean, it all depends on your time frame, Pat. I mean, if we're looking at this time frame, it's you can say it's still in a downtrend because we had a strong move yesterday, but we're still just where we were a few days ago. From a shorter term time frame, you could say it's in an uptrend here. So the trend all depends on the time frame that you're looking at. It's really kind of yeah, you gotta it depends what time frame you're looking at. Like if you're a longer term investor or shorter term investor. So let's take a look at this 5-year chart here. And we'll go to logarithmic. All right, well, from this, I would say it's broken its longer term trend. Again, this is a 5-year chart. So let's take a look at this. So when did we break our uptrend? I would say here in April. From this time frame. I don't know why. I guess it's just force of habit. But my general starting point is I look at the year chart or the year-to-date chart. So that's my, so yeah, I guess, so that's a question that you can't really answer unless you know what time frame you're talking about. Rocky Mountain Liquor. Campbell's reported. Now, if you remember, we were looking at Campbell's as a potential. Oh yeah, look at that. So those of you who, if anyone bought a combo on this, they probably are making some money now. Let's see if the news is good. It was pretty funny when I was younger. I used to date a girl, and her father worked for Campbell Soup, and he claimed that he got hurt. He claimed that he got hurt, and he hurt his back, and he couldn't work, so he would get disability. So anyway, they had a private eye following him around, and they had pictures of him on, like he went to court, like on crutches and everything. And then the private eye shows pictures of him on his boat throwing his grandson up in the air. It's like 2 or 3-year-old grandson, like throwing him up and catching him. All right. So anyway, Campbell's Soup. Let's see if it's trading. Oh, wow. So is that this morning? Today's June 8th. Yeah, look at that. Woo. 48.35. Well, I would say if I put a combo or a straddle on this, or a combo, I'd probably be thinking about closing out of it right now. And that's because it got up to 49. Now it's down to 48.30. Yeah. All right. So that looks like a good one. So let's see. They raised their guidance. But I wonder if this is the type of, I wonder if this is the type of thing that like we saw on Tyson Chicken. Like maybe it's not as good as it seems, because maybe the reason why they have to raise their prices was due to inflation, due to higher, raising their prices because of higher input costs. So yeah, so I would keep an eye on that one. Oh, Maddie. So Maddie's got a strangle. Oh, $1 move isn't enough for the strangle. All right, well, Maddie, let's take a look and see. If it's good, let's see. Press release. That's not it. News. All right, let's take a look here. Let's see. So their earnings are up 15%. CEO, as expected, we had a strong recovery across business in the quarter with high single-digit sales. Yeah, you can, just from this first sentence here, when it's like as expected, we had a strong recovery, So these you could tell that these are good earnings just by that one sentence. I would think, as expected. It's like, yeah, hey man, we told you guys we were going to be good. So let's see. Our improved supply chain execution, along with inflation-driven pricing, began to mitigate margin pressure we had experienced over the last 12 months. While the operating environment remains challenging, we continue to expect significant inflation. Our team is executing well, and Campbell is on a much stronger foundation. Looking ahead, we are raising our fiscal net sales outlook. So these numbers look pretty good, Maddie. I don't know, maybe it'll continue to move ahead here. Let's see. Revised guidance, -2 to 0. Now they go 0 to 1. Organic net sales, they see up 1 to 2. EBIT is still the same. Raised their earnings guidance. Conference call is at 8 Eastern time. I mean, I don't know. They look pretty good. All right. Well, I hope that works out. Brandy, just a reminder about my calls option question. Okay, yeah. So calls. Let's see. Okay. So your question is, why is the stock not trading higher if they have a bid on the table for $60 per share? Franchise group to acquire the company for $60 per share. All right, so let's look at this one, because that's a good question, because you think it would be free money, right? You just buy it now, and if the deal closes, you get $60. So let's see if they have any comments on it. Enters into 3-week exclusive negotiations. That's pretty weird. The purpose of the exclusive period is to allow FRG and its financing partners to finalize due diligence. The transaction, there can be no assurances that any agreement will be reached or a transaction will be agreed upon. So I guess there's in the community, right, investment community, the arbitrageurs are the people that are looking at this stuff. And if they got a bid for 60, why is it trading at 45? And the answer is, well, for some reason, people think that the deal is not going to go through. Right? I mean, that's a pretty significant discount. Usually, when there's a deal, stuff trades at a discount, but it's not a tremendous one like this. So I guess it's kind of like what we're seeing with the whole JetBlue Spirit Airlines thing. You know, the bid is on the table, but there's significant doubt of whether it's going to be accepted or not. So, you know, maybe people at Kohl's say, hey, back in February of November of 18, where stock was at 82, we want $82 for it. So that's the story with that. Chica Blue, can you close an option before the market opens? I guess that probably depends on your broker. Jeff R. When a stock splits, do the charts show the historical price? Yeah, I mean it gets baked in. So like look at here, here's Amazon, 123. So this shows post split. Is there a place to find historical information on stock splits and reverse splits? I find it difficult to calculate my cost basis. Yeah, I mean, I would think, you could go to their website and it would give you a history of their splits. There's you could find the history. Let me think about where. I know that there's somewhere where it shows them. Let's see. Info.com. This is Amazon's fourth stock split since its IPO in 97. It's first since 99. Yeah, so I don't know exactly where to find it, but it should be pretty easy to find. And I got to be careful. I don't want to show any other websites. What is EBIT? Earnings before interest and taxes. All right, so Casey's. All right, so Casey's looks like it's down a few dollars. We were thinking that they might miss their earnings because of gas. All right, so RBC lowers the price target, so that's a sign. Good. So let's see, they beat by a penny. But I don't know, the stock's trading down. Maybe their guidance wasn't that good. Oh, you know what? Oh, sorry, Brandy, I forgot about that. Um, Mark, the question is, what happens to an option if they get bought out? Um, I don't know. I guess they would just the whatever contracts are outstanding, they would just settle up and then just cancel uh going in the future. So I don't know. I don't know. Safer, have you ever had that happen to you? You have an option of a stock that gets bought out. Um yeah, I don't know. We could probably look at the exchange though, the options exchange and see. Yeah, I'm not sure. Let me do a little more research into that. All right, so let me jump in here. We want to talk about trends, and but I like to look at the news, and I got up a little bit late this morning, so I have not looked at the news yet. So let's take a look at it here. Oh, look at that. Jeez. Lucid Rivian. You gotta be kidding, man. Guys get paid $400 million. All right, so let me just see something here. All right, so this stock has gone from 55 to 19. This stock has gone from 175 to 30. So why are these guys each getting paid? This just kind of upsets me, and I guess I have to admit, it's part of jealousy. But you got to be kidding me, man. You're running a company that doesn't make any money, and you're getting paid $400 million. It's like that thing that we saw with the Tiger funds, and you want to talk about how um inequity, I guess. Um, like when Tiger raises all this money, like the senior partners of the firm get paid a lot of money, tens of millions. They're wealthy and they never have to work again. And yet they blow up their fund and they lose all their clients' money. So the secret on Wall Street is really not about having good performance, at least in the institutional world. It's about being able to raise the money. If you raise $1 billion to start a fund, you're going to get rich off the fees, and you could just crush your clients. So yeah, I guess that's just how it works. But Walmart Arab agrees to buy the Denver Broncos. I had a friend who his daughter used to babysit for John Elway, and he said his refrigerator is fully stocked with vodka, and he starts drinking at noon, and he smokes like 2 packs of cigarettes a day. Um, so anyway, that's just a little side note there. What are my thoughts on DocuSign earnings? I don't know. I think they should be okay because I don't think this is a company that's going to be impacted by inflation as much as some of these other companies. So I would think their earnings are probably going to be okay. All right. So anyway, let's go back here and let my anger just flee away here. All right. Tech stocks, tech's decade of stock market dominance ends for now. Wow. Sector tumbles worse since 2002. Big technology stocks are in the midst of their biggest rout in more than a decade. Some embrace investors haunted by the 2000 .com bust are bracing for losses at. Well, we now just need to watch if SPY breaks 415, because as we've seen, the market doesn't go in a straight line; it goes in steps. So we don't have to guess which way the market's going to go. We're going to let the market tell us. If we break 415, the next stop is probably up around here, around 428. So as we saw when we broke here, the next stop was up around 415 because that was the bottom over here. So we will see. I got this yesterday from this website I subscribe to, Sentiment Trader, and let's think about this. Record outflows of ETFs. Record outflows of ETFs. The total outflow was the worst since 2000, but ETFs weren't that popular back in 2000. No month in over 20 years has seen a more concentrated exodus. All right, sector flow as a percentage of assets under management. Sector flow and funds. So this is probably the more important one. But you know, I mean, this is not this is not surprising. Yeah, this is not surprising, but it is a pretty bearish. I mean, sorry, this could be construed as being a contrary signal. Guys, I'm going to take a 2-second break and just go get some more water.
In the meantime, folks, while Mark comes back, just want to let you guys know that if you do want to join the trading school, there is a link in the chat on Zoom and also on YouTube. And basically, it's $7 for 7 days. So if you want to give it a shot, that's pretty much like your trial period. If you want to keep it after that and pretty much be part of the community, it will be $14.97 for the year. That's after your 7-day trial period, right? So 7 days for $7. I don't know what else you can do with $7 that is going to give you the benefit that this will. So we're just going to wait here for Mark to come back here really quick. But you know, you guys sending emails, so I just wanted to get that out of the way. The link is in the chat. We're going to post it again. Just give Mark a minute here to come back. Yes, you do get a laptop. All right, Mark's back. Let's go.
Okay, I'm back. All right, so what does this tell us? I don't know, just more confusing information, I guess. So we know tech has been getting crushed. Yellen and World Bank expect elevated inflation to persist. All right, so we know about that. Spirit Airlines postpones shareholder meeting as it weighs Frontier JetBlue bids. Talks on grain passage end without breakthrough. Looming food crisis. That's not very good. All right, so let's look at this because maybe this could give us some insight into this whole deal with coals. Oh, okay. So this is maybe why it's this is why it's trading at such a discount. Franchise Group is saying it would kick in $1 billion, but most of the deal would be financed by selling Cole's real estate. So there's probably some question as to what the real estate is actually worth and how much they could sell it for. Senator Tammy Baldwin from Wisconsin has come out against the deal. I urge Cole to reject any offer that dramatically increases debt, sells off assets. All right, so basically, what they would do is they're gonna buy the company, but when they do it, they're gonna sell a lot of the stores of the properties that they own to finance the deal. So there could be a question as to how much we could sell this for. In May, Kohl's shareholders rejected an activist investor's push to replace up to 10 directors. All right, several weeks ago, Kohl's had indicated to suitors that it believed the company was worth $70 a share. So that's, yeah, so there's your disconnect there. So when we talk about trends, right, markets are always doing one of three things. They're always going up, going down, or staying the same. What the heck is this? So markets are always trending, right? You don't need to be a guru to see that. You can just look at pretty much any chart. So let's take a little look at this here. So prices don't jump around in random ways. They're always moving up, down, or sideways. Efficient market hypothesis, random walk are wrong. So don't listen to those. And don't listen to people that say you can't time the market, because you can time the market. You just need to know what to look at. So that's why we're here. So when markets are trending higher, all right, the buyers, they don't mind paying higher prices. That's the psychology. You think the market is going to keep going higher. I remember hearing a conversation years and years and years and years ago, back in the 90s, which is totally emblematic of a bullish market, where some guy was saying that he wanted to buy a stock that was trading at $3, and he wanted to buy it on margin, but his broker said, for you need to buy something on margin here, it needs to be at least $4. And he's like, all right, well, just buy it at $4 then. So the stock is trading at $3, and this guy is willing to pay $4, which is completely, stupid. But in bull markets, people don't mind paying higher prices because they think that things are still going to go higher. There's still going to be sellers out there, but they're only going to sell at a premium. The bears are nervous, so they're willing to sell, but they're going to want to get a little bit of a higher price. So that's what drives markets higher. When there's not enough supply to fulfill all of the demands, buyers are forced to bid higher prices, and that pushes the market up. So the opposite is true in bear markets. The sellers don't mind accepting lower prices because, well, it's not that they don't mind. I guess they just accept the fact that they have to accept lower prices because they think the market's going to keep moving lower. So there's still buyers around, but they'll only be willing to buy at a discount. So that's the psychology of the trend there. So let's look at the bid and offer, because I get a lot of questions about this. So every stock has a bid and an offer. The bid is right now, at this current time, the highest price anyone is willing to pay, or anyone is willing to telegraph that they're paying. And the offer is the lowest price anyone is willing to sell at. So the bid is always lower than the offer, and the difference is called the spread. So if we have a stock that's quoted 20 to 20.05, the spread is 5 cents. So if you were to come into the market here and you wanted to sell or buy, you have two options. you could come in and just say you're a seller. You could sell it at the market using a market order, in which case you'll receive 20. Your other option is you could use a limit order, and you could say, you know what? I don't want to sell it at 20. I'm going to sell it at $20.04. So now you'll see the quote would shift from 20 to 20.04, because now you are in the universe, the person who is willing to sell this stock at the lowest price is 20.04. So when you hit a market order, you're guaranteed an execution, but you're not guaranteed a price. If you use a limit order, you're guaranteed the price, but you're not guaranteed an execution. In other words, you could post your offer at 20.04, but if no one comes along and takes your offer, then you're not going to sell your stock and you're going to get a nothing done. Now, in today's world, with all these algorithms and so forth and so on, there might be a lot of different things going on in between here that they just aren't showing. In other words, maybe there's someone who's willing to pay $20.02, but they don't want to show it, so they don't post it, right? There are ways you can place your trades where you can put something out there without showing it. So you might come along and sell 100 shares at the market thinking you're going to get 20, but you end up getting 20.03 or 20.02. The whole thing with the payment for order flow that is, people are talking about now is the pitch of the wholesalers or the brokers that pay for the order flow as well. The best bid showing now is 20, and we're going to pay you 20.01. So we're improving your price. But in reality, there might be someone out there who's willing to pay 20.02 or 20.03 or maybe even 20.04. So there's a lot of stuff going on in between the bid and the offer on popular stocks, but it's just important to understand this. So the bid is the highest price anyone is willing to pay that they're showing. The offer is the lowest that anyone is willing to sell out that they're showing. So every stock has a bid and an offer. And you got to be careful with this stuff, with illiquid stocks, and especially with options, because sometimes options have really wide spreads. And just say theoretically your option is quoted 20 to 30, right? Well, someone comes in and buys, so it's quoted 20 to 30, and you're interested in selling. So someone comes in and buys something and it trades at 30. And you see, oh, the last trade was at 30. I'm going to go sell at the market. But you end up getting 20 because that was the highest bid at the time. The 30 was the last offer price. So you really need to be careful about that, because if you have a wide spread, the current spread might not be indicative the last trade might not give you a good picture of where the actual market currently is. So if you're selling something, you want to see what the bid is. If you're buying something, you want to see what the offer is. But, like I said, you might see, oh, XYZ traded at 30. That's a great price. I'm going to go sell mine. Oh, why did I only get 20? Well, the answer is because the last trade was someone taking the offer. Now your trade is going to go on the bid side. So keep that in mind. All right. Seth is asking me here about the financials. Well, I would say, again, it depends on the time frame. But let's take a look at XLF. I would say the key here is whether it gets above this 36 level or not. But when we talk about, is it in an uptrend or a downtrend, it's really not a question you can answer, without considering the time frame, because it's all going to be relative, right? If you wanted to look at like a longer term time frame, you could say, yeah, XLF is still trending lower. You know, if you're looking at it a shorter term time frame, or I'd say an intermediate time frame, you could say, you know, XLF is trending lower here on the shorter time frame. But right now, I think the most important thing is this 36 level. But when you're, you know, you talk about trends, you can't really understand the trend unless you're thinking about the time frame. So if this doesn't break, you know, will this be another lower high? So remember, markets go in peaks and valleys. So these are lower highs. This shows as time goes by, the sellers are becoming more aggressive. Here there were sellers at 41. Here there were sellers at 40. Here there were people that were willing to sell at 39. I mean, it doesn't sound that dramatic.
All right. So sorry guys, I didn't know I was muted, but yeah, basically that was the sneak peek, right? I gave you a little bit there of the trading school. That was the class for trends, and that was the class from 7 a.m. So we have classes Monday to Friday. So Monday to Thursday, the schedule is 7 a.m. to 7 a.m. to 9 a.m. Eastern. And then you have another session from 12 to 1. Everything is Eastern time. Now, keep in mind the chat rooms for live trading are open the entire day, 24/7. So you can be trading all day there with the students. We even have a chat room for the students. Look, that's how much we spoil these guys. Student plan project chat. So they got their own chat and they have their own trading system, something like that. I'll show you really quick here. It's really nice. You know, this is really what teamwork looks like. It's, you know, books and stuff, all that, you know. And you have a student chart of the day. This is a new one. It seems like they just keep adding more stuff here. And I mean, they don't even tell me at this point, but they are adding some more stuff. I see that, and that's good. So shout out there to Vin, Tammy, right? Shout out to Neil, all the people that are working with the coders and all that stuff behind the scenes. Let's go. Shout out for all the coders out there in Benzinga that are working on this stuff. We love it. The people love it. I love it. It works really nice. So these are the live trading rooms, right? This is where you can talk with all the other chat members with Mark Putrino also. So look, you have a chat room called Questions for Mark. So for any reason you cannot attend the live demo, or you just, you know, you work full time, whatever it is, right? You have a chat room that is dedicated to ask questions to Mark. So you have so many resources out there. This is, you know, primarily for those people that maybe might not be able to attend the Q&A session, but even if you do attend them and you have another question and all that sort of stuff, you have a dedicated chat room to ask questions, right? It's a knowledge bank. And it's great if you just scroll through this chat room, you basically get everybody's questions, and ultimately you can find stuff out that you didn't know that you didn't know, right? So you can find out there. And then you have Mark's trade ideas. This is where Mark goes wild with his setups and things like that, trade ideas, all that sort of stuff, entries, exits. This is a really nice one that played out with Kimberly Clark, a good short trade. And you can find all these sort of trades there, right, in the chat room with Mark. And of course, you know, follow up with him at any point, you know, in the class when you can. Let's see what's going on there. Kimberly Clark. Yeah, so he called this thing when it was like 138. So, all right. Okay, so he called it out, and that's a pretty easy trade, right? I mean, I kind of just need those levels out there, but that is Mark's trade ideas. Then you have the general discussion. So if you want to have a general discussion with anyone, looks like some people are putting some music there. Oh, that's Mark. Mark posted that. Okay, so um, wait, I think only, no, I think everybody can post. Yeah, everybody can post here. You see Brandy posted a chart there. And looks like Mark was the one that put this song in. So we'll listen to it later. I think you should join and listen to the song. See what else he put out there. Golfers?
Start the backswing.
Okay, nice. Some people in the chat room love to play golf. Okay, so community support. If you would like to get community support, you have a chat room there. And also keep in mind you have quizzes, tests, so that you can actually make sure that you're learning. And if you're not, you know where to improve. We have a chapter. We have a quiz for every chapter. So, for example, if you're struggling with technicals, you can look at the levels, trends, momentum. You can look at all these sorts of, these are quite long, you know, so this is knowledge, guys. You know, education is key. Education is key. So you can see you have all the quizzes there, right? And you have patterns. That's a really interesting one. But I'll tell you which is my favorite class. My favorite class is investment psychology. I think it's the most important class for traders to take because without it, it doesn't matter what you do, you're pretty much going to be losing money. So I think it's just, you know, it's very important, you know, to take the education seriously, guys. It does, it's either get the education or, you know, pay the market tuition, which, you know, it's unlimited, right? And it's forever if you don't correct. And sometimes we don't even know how to improve our trading, you know, because maybe we're trading alone or we're trading in like a little Discord chat or something like that. You know, you're really not out there exposed. And being part of the community is definitely going to give you some good exposure to some really good traders, some good swingers, scalpers, option traders, and more importantly, Mark Putrino, which is, you know, the king of charts, right? He's also a CMT. If you don't know what that is, it's a chartered market technician. So since like 2001, basically that means that he's what you hear on CNBC when they say, you know, the market technician, like that guy, I forget his name, the chart master, they call him, something like that. He's a CMT. So basically it's like a certification that you can take out. And Mark has it. So keep in mind, like if you can't read a chart, it doesn't matter what you're trading, you will lose money. It doesn't matter if you're trading options, if you're swinging, if you're scalping, if you're day trading, doesn't matter. If you can't read a chart, you're going to lose money. And if you trade options and you can't read a chart, you're going to lose all your money. I know because I blew up my account twice when I started trading. And I wish that I had something like the trading school, right? And it's great. It's amazing that, you know, Mark is doing all this work for you guys. But keep in mind, like I'm the one that has to talk to thousands of traders. I've talked to 6,000, 7,000 traders here in the past year and a half. And I've really gotten to know a lot of users and traders from around the world, right? From around the world, because we do have an international community. But it's just different once you're part of something bigger, right? You're part of something bigger than just yourself, and you're trading with everybody together as a team. My food's here, but basically that's really what I think, guys, that is one of the most important things for trading, right? Reading a chart is so critical, you know. And when I blow up my account, there was no, you know, there really wasn't any trading school or nothing like that. And I made a bunch of mistakes. You know, I joined some pump and dump chat rooms, Discord chats, all that sort of stuff. And ultimately, you know, I kind of found my way along the ropes, and then, you know, found Benzinga. And you know, I've learned so much from Mark. I mean, I can't even quantify like how much, you know, from what I make is because of him in trading. Because again, the fundamentals, right? Fundamentals, guys. Let's get back to basics. The basics here are reading a chart. That's, even though it sounds simple and you might say, oh yeah, I got this. It's very different when you're actually, you know, in the heat of the moment, making the trade with a big chunk of money. It's just very different. So a systematic approach, a strategy, a plan for your trades, that is going to be the best way for you to be successful. And you're going to have losses for sure. but you need to have more wins than losses. It's okay to, I mean, no one, gets everyone all the trades right. However, as long as you get more right than wrong, really, that's really what it boils down to. Okay, so those are the chat rooms. I said it comes with Benzinga Pro, so it does come with Benzinga Pro. I don't know if you guys want to look at something here, but just as an example to give you a quick show. See, I mean, let's not look at. Let's look at. So let's look at PayPal. Yeah, this must be okay. So you can do all of your charting. This is just so ugly, but yeah, I mean, you can do all of the charting here in your Benzinga Pro. So you don't have to go anywhere else. You have it right here in front of you. Also, you want to check the news, breaking news from all sorts of different places. You can check it out here. And this collects data, right? Keep in mind, Benzinga is like a financial media company. It's a lot of other stuff, but when it comes to this pro stuff, that's pretty much our bread and butter. And this is all good information, reliable information for traders, even for people that are not trading. I talked to this person who lives abroad in a different country, and she just wanted to get pro to get news. I guess she works in the news industry, and she just likes the way it's organized and formatted. She's not even trading stocks. She's just like in the news industry, I guess, or something. So so many uses, guys. Also for traders, I think it's obviously the best one, but this is one of my favorite tools here. It's the movers. And if you can see, all the tools are going to be on the top right. You just put your mouse there and they all drop down. So, okay. So this scanner, I use it a couple different ways. Sometimes I use it to like, if I'm day trading or something like that, I'll put for the session, gainers, regular, bring down market cap. And you can customize however you want it, the price and the market cap. That's really important. Or one second, folks. Okay, all right, we're back. We're back. So you can use it a couple different ways. Jeff Strong from the YouTube side, I mean, that's 100%. And hopefully people like join the school and they can learn, like actually learn instead of learning by blowing up your account or taking massive losses. These are tragic moments in traders' life, people's lives in general. You blow up your entire life savings, or half of them or something like that. And the worst part is that you don't even know how you lost it, right? Because you're still kind of learning. And I talked to a lot of traders out there, so I can just tell you that it's different when you're talking with people on the phone. A lot of traders struggle with very similar things. So I think the trading school pretty much covers all that stuff. So keep in mind, Mark Putrino traded with Mario Gabelli, which is a multi-billionaire. He has about $35 billion of assets under management. And he also traded with Steve Cohen, who ended up running up to 40 billion around there. $40 billion assets under management. And I think he's the owner of the Mets, or I don't know, some baseball team. So Mark Putrino basically does have that background, that experience that you do want in your instructor, in your teacher. I guess we covered all that stuff, guys. We covered the majority of the stuff. I just wanted to show you a little bit of the class. If you have any questions, just reach out. And the link is going to be in the chat. $7 for 7 days. I don't know what else you could do with $7 that can give you this much value. After the 7 days, it's $14.97. You get a free laptop and Benzinga Pro. If you have questions, reach out. Thanks for being here, guys, and we'll see you next time. Have a great day. Safe trading.